My name is Cody Kraus, and I'm a real estate broker owner that's obsessed with everything real estate. Investing, building, selling, developing, farming, you name it. I've been doing this since I was 18 years old, and I've learned a ton through trial and error, and I've met some of the coolest people ever. This is a show where I invite these people on to talk about their experiences and mine, plus everything else real estate. Let's go. Okay, well, welcome back, everybody, to another episode of the Everything Real Estate Show. Today, I have Russel Lalovich on the show with me. And for anybody who doesn't know Russell, why don't you introduce yourself to us?
Yeah, thanks for having me, Cody. My name's Russel Lalovich. I've been a realtor in the Windsor area for about 14 years.
Yep.
I recently got the RE/MAX Lifetime Achievement Award.
Oh, cool.
Yeah, we run a small team, kind of trade names, Lalovich Real Estate. We do, I think, more commercial real estate than anybody in Essex County. Avid real estate investor. And I'm married and have a 2-year-old and a dog. So
Okay.
Busy home life as well. So thanks for having me and hoping to add some value to your audience.
Appreciate it. So lots going on at work, lots going on at home. I was creeping your website a little bit, and I noticed you're a CCIM candidate. Do you want to maybe let us know what exactly CCIM is and what that entails?
Yeah, so CCIM, it's like this global commercial real estate designation.
Yep.
It's mostly in the US, I would say, but it is in Canada, and it's kind of centered around the big markets. So there's a lot of people, like in the Toronto area, for instance, that have it. In Windsor, there's not many. I think there maybe is just a couple, and one of our kind of older competitors that had it, he's pretty much retired now.
Okay.
So it's a long process. There's a bunch of educational requirements. There's also like transactional volume requirements. And then you kind of have to put together a portfolio, finish all the exams, get your portfolio reviewed, get all these like letters of recommendation, and then write a final exam.
Okay.
So the actual putting together of the portfolio part, I kind of dreaded for years. So I put it off. But I committed to it this year.
So that only gets more difficult as the portfolio grows, probably too, right?
Yeah, like honestly, yeah, they're asked for a bunch of things specifically on different deals and whatnot.
Yep.
So it's kind of a pain, but yeah, I finally got that done this summer. Submitted everything, and now I'm going to write the final exam in March next year in Florida. So
it's a designation that'll show your potential clientele that I specialize specifically in commercial, and I give enough care to the industry that I was able to demonstrate my understanding. And
for sure, yeah. So there's an educational component. So you got to have certain aptitude. There's a volume component, so that you're doing a certain amount of transactions, obviously.
Yep.
And ethics and stuff like that, where you're able to get letters of recommendation.
Cool.
So so it's kind of a comprehensive thing. It's it helps you out because a lot of stuff filters through the industry, like the commercial real estate, like the big brokerages control a lot of stuff.
Yep.
And a lot of times when they're looking to send deals to different markets, they send them to other CCIM members. So
Makes
hoping
sense.
it'll be a good thing for us.
Then there's a baseline of knowledge and experience.
Exactly. Yep.
Cool. And so I guess a few questions, based around being fairly prevalent in the commercial real estate industry in Windsor, specifically the sales and investing side of it. What's the profile of the people or corporation that's buying a lot of commercial real estate right now in Windsor?
I mean, I think it's a mixture. Obviously, we have big, infrastructure investments with the bridge and the Nexstar plant and whatnot. So there's definitely institutional, ownership coming in and whatnot. But there's also mom and pops are doing well. Like Windsor Essex has grown more in the last couple of years than it has in the 20 years before that, but based on population. So there's a lot going on. But yeah, I think it's kind of a mix of everything.
So I was flipping a house right near University of Windsor during the beginning of COVID, and driving up and down here on Church at that time, it would have been 2020, 2021.
Yep.
Just saw like an unreal amount of strip plazas going up. And I was texting a friend of mine. I'm like, from what I've seen, these new strip plazas, they're renting out at like $30, $35 a square foot, which is crazy money. So usually they're smaller areas, like 1,000 square foot shops and stuff. And I was like, who's leasing these spaces? Like, how does that make sense? And especially west side of Windsor isn't necessarily known for being a wealthy area by any means, right?
For sure.
So I'm going, who's patronizing all these restaurants that are opening up and paying these crazy amounts of money? But it was almost no independent businesses. It was all franchise models, I guess.
Yeah, you do see that. Generally, those are the only tenants that can afford that rent. They definitely don't have the best track record of making it in Windsor, I would say.
Yeah.
But yeah, that's an interesting topic as well, where I think we're seeing pressure on prices of resales of like strip plazas, where the existing numbers don't make sense, but a lot of times the sellers they can't reproduce this for double what I'm asking.
Yeah.
And it's true. And so I think that there's sort of a supply constraint on especially retail, office, stuff like that.
So they're looking at replacement value, but did the older buildings typically have the A+ location already?
A lot of them will.
Yeah.
They're not brand new. A lot of times they can't command those like $30-something rents, but if they can command, say low 20s or something,
when historically they've been 10.
Yeah, exactly. Like it's pushing up rents also, right?
Yep.
It's pushing up existing rents. So in a lot of the well-located retail, we used to lease stuff for like 12, 13, $14, and now you're seeing it, push 20 or over 20 sometimes.
18, 20 plus CAM fees. Yeah.
Yeah.
And who's buying the plaza? Is it like an owner occupant where they're going to be the anchor tenant? Is it REITs that are going, like my parents ran a small business in Windsor for 35 years in the Roundhouse Center.
Yep.
And I think it was originally owned by someone local. And then partway through their tenancy, they got bought by a REIT, which was, I think, RioCan. Is it other REITs that are buying a lot of these strip plazas, or is it locals?
I would say it's more locals or individuals.
Okay.
The REITs, I'd say they're generally only interested in like anchored type of properties where, there's like grocery store or something like that.
They got a Shoppers Drug Mart, so they can justify the rest of it.
Right. And a bunch of national tenants. It's easier for them to finance it with their bank, their lender. So if you're talking like a neighborhood plaza, they're not interested in that stuff because it's not really what they do.
Yep.
But I would say generally it's probably more private investors.
Okay.
Yeah.
And how are they buying? Like generally when you're trying to get into commercial, the barrier to entry is quite large compared to residential. If I want to buy a rental house, I can go to, any of the big 6 banks or to a mortgage broker, get a decent interest rate and a 25-year loan with 20% down.
Yeah.
How are they buying commercial properties as individuals and small companies?
Yeah. I mean, that's definitely a challenge. Kind of like that initial capital, because I have people that come to me and they're like, hey, I want to invest in commercial real estate. I saved up a couple $100,000 or something. It doesn't give them a lot of options.
Yep.
Generally what you're able to borrow is based on the property's cash flow. So everything usually is debt service based. Generally you'll see like a 1.25% debt service ratio that the lender requires. And generally they'll have other rules like an LTV of 75% max as long as they meet that debt coverage.
Yep.
So to use that example of $200,000, like you'd be looking at it max $800,000 property,
which would be your 25% down, and that's
which doesn't get you much.
Yeah. Carries $600,000.
Yeah. So it's tough. It's tough with the limited capital. It's definitely something that I think maybe when you get to the next level and you have like a little bit more capital to play with, commercial probably makes more sense.
Yeah.
For the average person.
Debt service coverage ratio, for anybody that doesn't understand that, it sounds like a confusing commercial term, but really when we buy a house, we have to go through it too, right? They say, okay, well, if the Krause household is trying to buy a house of, $500,000,
right?
If Cody's putting $100,000 down, there's a $400,000 debt line. The payments are going to be X. I think the rule in residential housing is you can't exceed 41% of your gross monthly household income can't go towards gross debts. So if I had a car loan, student loan, and a mortgage payment, the total of all those payments can't exceed 41% of what my family's take home is.
Exactly.
And then on the commercial side of it, they would look at it, okay, so this numbered Ontario company is looking at buying this plaza. This plaza brings in, $100,000 a year in gross rents, and it's trying to service $650,000 of debt, and they got to look at that and say, okay, is it actually going to cover the payments? Yeah,
they want it to service itself and have a margin on top.
Yeah,
so that the bank, they get their payments made.
Yeah,
so that's generally how it works. Unless you're owner occupying a property, then the rules can be different.
They want to look at the financials of your business,
right? But generally, unless you're occupying a significant portion of it, they won't do that.
Yeah. So, say I'm a small insurance brokerage, and I've been operating out of a plaza for a number of years, and I find out my landlord's going to sell it.
Yeah.
It'd be a good time to go have a chat with my bank and say, look,
yeah,
we got a history of paying this rent for X number of years, if we're 20% of the plaza and the other 80% is leased out, maybe the numbers could work out if the price is right.
It could, yeah, depending on the pricing, depending on the relationship with your bank, maybe sometimes. Sometimes a credit union, has more flexible rules. But yeah, no, that's an interesting option for someone for sure.
Yeah. Now, an investor looking at commercial, like one of the biggest draws, if you live in Ontario especially, is the fact that there's no landlord tenant board, where residential, you could end up without rent for 6, 12, 18 months.
For sure.
Depending how things go with the LTB and your tenant and things like that. So a big draw in commercial is if your tenant's not paying rent, you can change the locks or start negotiating with them for an out. There's 1,000 different ways you can handle it. So that doesn't necessarily apply. So bad debt isn't as common, I would say, not that it doesn't happen, because businesses do go under and everything like that, but it's easier to navigate in the commercial side of it. But then we have the barrier to entry, which is the financing is a lot harder too. So like, what are some other things that are appealing, but then maybe counteracted also in commercial?
Yeah, so exactly, for sure. Like the tenancy law part, a lot of people that I know have exited, residential landlord properties because of things that you're talking about. I personally had a situation where I think it took me 11 months to get someone out.
Yeah.
And I just basically ate it because the recourse really didn't make sense.
No, and you're rarely able to collect anything.
Right, yeah. So in commercial, it's all contract law. So it's pretty straightforward. It's like in your lease, it'll say if you don't pay rent, what are the landlord's remedies? And generally, it's to change the locks and, minimize their damages.
And a lot of the businesses are, like if it's a small business, they'd be personally guaranteed by the owner of the business too, right?
It's whatever is in the lease. A lot of landlords will require that depending on the, credit worthiness of the company. But it's whatever's in the contract.
Yeah. So that can be really attractive. Now, the other thing that can make the barrier to entry a little bit higher than residential is that typically when you have a tenancy, it's much longer than a residential tenancy. But on the flip side, your vacancies are typically much longer too.
Yeah. So a lot of times, because we do a lot of leasing, generally we're looking, 3 to 5 year leases, sometimes longer.
Yeah.
So you're getting longer term commitments for sure. But you're not going to turn like a retail vacancy the same way that you would turn an apartment.
Yeah.
Like where you got 40 applicants in a week.
6, 12, 18 months vacancy potentially, right?
Right. But we have definitely less vacancy in the area than we used to. So I would say that it's shorter than it had been. Like 10 years ago, it might take us months to lease something. Now it might take us weeks, depending on what it is.
So maybe that part's diminishing. Prices going up because of the buildings, because
prices
of that.
Are going up. Yeah. I mean, I would say cap rates generally are higher for commercial. Depending on what you're looking at, like industrial, retail, office, cap rate might range between like 5 and 7.5, maybe depending on like the risk involved. Whereas multifamily, you're looking at
4.5,
depending on what it is, but it could be anywhere from like 3 to 5.
So I had to do my commercial courses when I got my broker designation, and at the time they're having you do investment analysis and all that kind of stuff. And kind of the rule of thumb that people were gauging on, well, if your landlord's looking for an 8% cap rate, how exactly do you calculate all that? And for anybody who doesn't know, it's you take your net operating income and then divide it by the purchase price, and that gives you the cap rate. And it's not necessarily cash flow, because it doesn't take into account how you finance the property, but what the actual income of the property is. If there was no loan, it gives you a good profitability
like the operating income. Yeah, exactly.
And I think at the time I was like, okay, this is great. I'm going to start using all this math when I start analyzing residential multifamily properties when I'm looking at making offers on them myself. And at the time, like there was a fourplex I was looking at in Windsor, and it was like 6.5 or 5.5, and nobody would touch it, because at the time, like 10 years ago in Windsor, you could buy rental houses for $120,000, $140,000, right? So you're getting cap rates on residential of like 9, 10, 11%. But now that the homes have basically 3x'd in Windsor, I know in 2015, I think we hit 200,000 average sale price, and right now we're about 570, so it's about triple. But even more so on the entry level and the lower end stuff. Like you said, you might be lucky to get a cap rate of around 3.5%, 4.5% right now. So I know that's why a lot of people are looking at the States. But I think it's also causing a lot of people to go, maybe we should just change the asset class. Maybe we should look at commercial or Airbnb or something like that.
That's true. Yeah. Honestly, we just sold a plaza that just closed at the end of October. And the guys were pure multifamily guys. They've owned like dozens of buildings. They know that business really well. They're good at adding value.
Yep.
And yeah, they just kind of saw this commercial property and they're just like, oh, this is interesting, and kind of got their heads around it. It's not easy to come by multifamily. It's very competitive.
I'd say the financing is probably just as hard in multifamily as it is commercial.
There's different options because of CMHC.
Yep.
So there's like CMHC insured financing. So you can get very attractive financing if your property, kind of lines up properly.
Just have to hit a lot of qualifiers.
Yeah, exactly. But it's not easy, but there's more attractive pathways, I'd say, for multifamily.
Cool. And then we had my friend Carmelo on this podcast not too long ago, and we were kind of talking about his break into commercial investing, and he was able to do that with basically vendor take-back loans from the commercial landlord that was selling the property. And
yep.
I mean, I recently have kind of changed my investment criteria, and I'm personally moving away from residential towards commercial. And so for our first commercial properties, that's exactly how we did it. Is we set it up with a vendor take-back loan. Nice. We established terms. Typically, you're going to see somewhere from like 1 to 3 years where you're paying the original seller of the building,
yep.
And then at that point, it's your responsibility to go out and get yep. a loan from a regular lender. Why would a seller want to give a vendor take-back loan? What are some reasons for that?
Yeah, so again, it depends on like the motivation of the parties.
Yep.
But I would say if the seller is in position to hold a mortgage, meaning they have significant equity,
or they own it
free and clear, then obviously that makes it a lot easier. Sometimes they don't know what they're doing with the money. So, it gives them some time to plan out where they're going to invest their capital. It might be an attractive rate of return, depending on what you negotiate. Also, it makes it significantly easier to sell, So a lot of times if you say you have a property and it's not operating properly, or the financials aren't good, or the leases are month to month, or something like that makes it tough to finance. A lot of times a vendor take back is needed because the banks won't fund that, or they won't, buyers won't be able to pay the price that the seller wants with the current, income.
Yeah. And I mean, like when you're trying to finance a commercial property, if you're financing a house, usually the 5 business days is the clause that we're looking at. In commercial, you could be months, right? Like that commercial appraisal can cost $2,500, $4,000, and it can take you 2 months to get. And then the bank still has to process the application yet too.
It could take, on the latest plaza we just sold, I think it was about 3 months for them to get their financing like 100%.
Yeah.
And it's like, there's no point to push them because, you know what I mean? A lot of it's out of their control.
No one can do it
And
quicker.
if everyone's doing what they're supposed to be doing, you know what I mean, to try to get this closed, a lot of times you need to be working with the buyer.
Yeah. Now, the seller can actually stagger some of their capital gains over the years that they're getting repaid for too, right?
Yeah, that's another point because they're not getting all those proceeds. So that allows them, some tax planning that way as well.
Yeah. Now, the only problem is if they depreciated the building like crazy and it went up in value, then they can run into capital depreciation recapture issues
have no
where
money.
they didn't get all the money they needed for the building.
Yeah.
They financed it over a couple of years, but they have to pay that recapture too.
Usually we recommend someone talk to their accountant before we, agree to a VTB.
Definitely.
Usually right at the beginning. Like that's an early discussion.
Yep. Now, sometimes they can end up getting more for the building, like you said, because it could have been tough to finance at the bank if they had large vacancies or something like that too, right? So it can be, okay, maybe I got to hold the loan for 2 years, but I got, maybe 5% more than what I think I would have got if I would have had to wait for someone that was able to finance it.
Yeah, or physically not be able to sell it until, say a lease was renewed or something like that. Yeah. We actually we're working on a deal right now, same thing, that's closing later this month. And the seller kind of wanted to move on from the property now for some different reasons, but it was tough to finance because of the term left on the kind of head lease.
Yep.
And they basically had to hold the VTB to be able to sell it at this point. And they didn't want to at first, but after they kind of understood what we were seeing in the market, they were like, okay, if this is what it's going to take to sell it now,
we'll do it.
This is
I don't know the answer to this question, but say I'm Scotiabank and I lent you money to go buy a house and you don't make your payments, then I can sell the property, power of sale. On the commercial side, do I have the option to just take the property back, or is the law still that it has to go to the market power of sale?
That's an interesting question. I think legally you kind of have to get like an opinion on that.
Okay.
I think
I don't expect you to know.
I think
the
you
ins and
should.
outs there,
Yeah,
by
I
the
think
way.
you probably want to go power sale to protect yourself.
Yeah.
So that you weren't doing anything you weren't legally allowed to. But I have seen, other scenarios where they just took the property back and the people walked and they didn't really go through the formal process.
Yeah. So the person who bought the property, unfortunately, can't meet their obligations. So they would go to the landlord and say, "Hey,
Here's
you know
the
what?
keys."
So it doesn't affect my credit.
Yeah.
And so you don't spend, tens of thousands in
Yeah,
legal.
yeah.
I'm just willing to give you it. You keep the equity that I put into it." And
Right. Yeah, no, I have seen that as well. I don't think that's like the proper legal way to go about it, but
again, it's contract law, right?
Yeah,
so
yeah.
if everybody agrees to
yeah,
it, then
if you sign a document handing it back, then whatever.
it is what it is.
Yeah, exactly.
Okay. So we talked about a few things there, like who's buying commercial, how are they buying it, barriers to entry, benefits of commercial versus residential, and detriments also. We talked about cap rate. What's another way that they're looking at their purchase? Like if you have an investor, are they looking strictly at cap rate, or is there some other, I don't know what the right word is for it, indicators of value that they're using?
For sure. So obviously you need to look at the existing cap rate so you know sort of the income that you have to service debt.
Yeah.
Also like price per square foot. And then a lot of times what we're working on now are kind of turnaround properties where say the rents are too low. There's some deferred maintenance, there's some updating, renovating that needs to go on.
Yep.
So if the market rents versus the price per square foot is attractive, you can look and build a pro forma where you're going to get the cap rate up to a certain amount that is attractive, right?
So they might even be looking at a flip where, like, if you're flipping a house, you're putting in flooring and paint and whatever.
Yep.
If you're buying a plaza, you might be going to your tenants and say, "Hey, we'll redo the facade of the building. We'll get you a new furnace and air conditioner if you agree to these increased rents."
Rents are going from $15 to $20 or something. Okay. And then a lot of times those people, they aren't selling it; they're just refinancing it at that point.
Cool.
Yeah.
Now, what exactly, like you mentioned that you're a pretty avid investor yourself too. What are some key things that you're looking for when you invest into a property, whether it's residential, commercial?
Yep. Again, I would say kind of similar things. You're looking at price per square foot because I think you're buying, at the end of the day, you are buying like a building, like a piece of real estate.
Yep.
You want to look at the market. So, what are market rents, vacancy, like what are competing properties, who are the tenants, how do they make money, like what are the demographics of the neighborhood, stuff like that. And generally, if you can find a somewhat of a turnaround property where the rents are too low, again, there's some deferred maintenance, that's where I see most of the opportunity.
Okay.
Yeah.
And how much emphasis do you put on end user, location, condo versus freehold, all that kind of stuff?
Like as a
if you were buying it yourself, like do you have a preference to condo ownership versus freehold? Are you okay with buying a B minus or a C location if the cash flow's there?
talking commercial real estate.
Sure, or residential. Take it whatever way you want.
I mean, I think location's key, right? Like location, you can't change the location. You can always renovate. You can always try to add value in different ways, but you can't change the location. So location is definitely where you start.
Yep.
Demographics, especially from commercial real estate perspective, is super important. And then again, like understanding the market, understanding the competing properties, stuff like that. Just really, understanding the market that you're playing in, because it's different than residential.
Yep.
Yeah.
Now you spend a lot more time in this than I do, but outside looking in, just the way the world's operating right now, especially since COVID, personally, I see probably that there's going to be a lot less professional office space and small retail, and a trend towards logistics, warehousing, drop shipping kind of business models. What are you actually seeing out there in these properties?
Yeah. So I would say office, I would say it's starting to recover a little bit.
Okay.
I agree with you. I think that like there's going to be a gap compared to how things used to be. So I think it might be kind of a somewhat impaired asset class going forward. Unless it's really well located, you're willing to, get your hands dirty, renovate, add value, do stuff like that.
Yeah.
Retail I'm seeing is doing extremely well.
Okay.
I see more risk in the bigger retail. So if you got kind of like big boxes,
I think
where you end up
going
with,
under.
Yeah, if you end up with like 40,000 square feet, like, hey, what am I going to do with this 40,000 feet? That would more keep me up at night.
Yeah.
If you had a retail plaza with a bunch of sub 2,000 foot units,
Not a concern.
not a concern. Like,
Okay.
yeah, I think that market's even stronger than before COVID, and I think for the like what we were talking about before, they're supply constrained. Like it's hard to bring more of that product on the market at a price point that makes sense for the developer. So
I'm seeing a trend of like a lot of specialized boutique-y stuff too. Like maybe before someone would have wanted to open a gym, but now they open just a yoga or Pilates studio.
Yeah.
Or maybe they were going to open, an entire aerobics center, but then they just decided to do a small, free weight center or something like, or what's it called when you're throwing bars over your head and CrossFit. Yeah. Or just a CrossFit center as opposed to, a whole free weight setup.
Yeah. Like I used to go to a big gym. Now I go to like a boutique gym.
Yeah.
You kind of get your own little station, and it's kind of like a mixture of like, not really CrossFit, but like HIIT with like weightlifting.
Yeah.
I see that for sure. Like, to give you an example, we had a building in Windsor. It had a women's only gym for 20 something years.
Yep.
They left, went to a different location. The landlord chopped it up into 4 units. We got like a karate place, a yoga place, like again, some different, fitness related uses that are smaller and I think more sustainable.
Yeah. Well, and I even think of the restaurant industry. Like I was eating lunch this week. I had an appointment that got canceled. So I just went in for a quick lunch at like a big franchise restaurant, which I don't do a ton of that, but anyways, it was fast and it was easy.
Yeah.
The place was empty. I'm looking around. I'm like,
I know.
There's no one here. This is a really expensive piece of property. And you look at all the restaurants that are opening, they're 1,000 square feet, 1,200 square feet. You're either eating in or taking out.
Yeah.
But they're full and they're turning quick.
Yeah.
Whereas a lot of these big chain restaurants, I don't know how sustainable like these huge lease payments are going to be in an industry that's margins are.
The chain restaurants in Windsor have just never really done well, like in my experience.
Yeah.
They do well in the GTA, I think, just because of like population growth and density and whatnot.
Yep.
And I think they do well in the States just because they just have a culture of going out to eat a lot more and maybe not caring as much about the quality of food and stuff.
Small business, yeah.
Yeah. But for sure. But I would say hospitality, if you do it well, is actually doing really well. Like the good restaurants are busy. They're making money. I think they have a hard time with staffing and stuff like that. But that's the business that they're in. So
well, and they know it better than us. That's for sure.
Yeah.
Okay. Well, we covered a lot of things in regards to commercial real estate, both who's buying it, how exactly you get into it, things that you're looking for. Anything else that you want to leave the audience with in this discussion here?
Yeah, honestly, I think Windsor, just in general, like Windsor Essex, is in an interesting spot. I think we have a lot of growth going on. We have some big infrastructure projects. And I think Windsor is going to outperform. I think before we kind of had a tail or a headwind of being kind of tied to the U.S.
Yep.
And I think it's going to be a tailwind for, the next several years. So I think Windsor Essex is looking good. I think commercial real estate fundamentals in Windsor Essex are solid. And, happy to connect with anybody, whoever wants to talk commercial real estate.
Cool. That's awesome. And one thing I'll throw in on that too, like, Canadian economy outlook, not great, right?
Agreed.
Shrinking GDP per capita, all that kind of stuff. But being in an area that's on a really busy international border crossing, that can actually benefit our area with the Canadian dollar, right?
Yeah, like that link to the U.S., I think hurt us for a while because, they had their great financial crisis. Things were kind of unwinding for a while. But I think now things are going the other way. I think some of the GTAs might struggle for a while. And I think we'll get a tailwind from being, more tied to the U.S. So I think we're bullish.
Yeah, and still obviously much lower prices.
And
than
still,
GTA too, right?
exactly. You can still buy something, the average person almost,
Yeah.
Whereas in the GTA, it's like unless your parents help you out or you're a super high income earner,
or it's
impossible.
Yeah. Cool. Well, ladies and gentlemen, that's Russel Lalovich, Lalovich Real Estate team in Windsor. They specialize in commercial property. And if you have any questions, I'm sure Russ is open to answering them for you. Thanks, Russ.
Perfect. Thank you for having me.
Thanks for listening to the show, folks. Please keep in mind that this show is not offering legal, financial, or accounting advice, but rather opinions and experiences in the world of real estate from the host and the guests. If you're enjoying the show, Please rate, review, and share with your friends and colleagues. And if you think that there's someone that needs to be on this show, please feel free to connect them with me. Or if there's a topic that should be discussed, feel free to let me know. Thank you so much, and bye for now.